Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
One of the most important things that you can do as a trader is you can journal your trades. And so this short video by Coach T here, I should say hello, at Tackle Trading is to explain how to use one of our tools. We're calling it the Tackle Trading Trade Journal. Right on the nose, very descriptive, very simple. Now, inside this post, inside WordPress, if you're watching this on YouTube, you may need to go search for that. But at tackletrading.com, if you put in the search Tackle Trading Trade Journal, you would find the post for it, and you can download that journal. It is what we use for our community, for our team, for everybody out there to keep score, keep record, and keep track of what they're doing. First thing you got to do, you got to put in the account value, okay? So how much is in your account? You know, if you've got $100,000, then you need to put in $100,000, whatever the number is. If you have $10,000 or $25,000, put in the account value. The largest winning trade and losing trade will be data that is gathered for you as you keep track of your journal. Same thing with average days, total net profit, gross profit, losses. All these things are calculations that are done for you as you fill out the information. We'll talk about them as we go. We'll start with then the fields themselves. Line number one, the symbol. You have to put in the symbol that you've traded. Now, when you make an entry point, you then need to fill this out box by box. Now, this is a very important little drop-down arrow here. You click this and you have to choose credit, which means you received money, debit, which means you paid money. Now, those are for option trades only. If you're trading stock, you choose long stock or short stock. So let's say that you just bought 100 shares. Well, then you're going to skip this next column because you didn't trade an option. You're going to put in the entry date. Maybe it's 1/10/17. Okay. Then your entry price, 52.25. There is no expiration date because you didn't trade options. Your size, maybe we did 100 shares, so on and so forth. Now, once you get out of the trade, you then also have to log this in here. So if your exit date was 1/12/17 and you sold it for 53.37 for 100 shares, it then will log your trade. This column here, exit to date, to price, to size, that's if you have independent exits. You'll learn how to deal with those little issues as you go. You'll notice some of these little carets as well, the little red triangles in the top corner of the cells. When you put your mouse over them, it will bring up a little pop-up, kind of explain what those are, you know, as you go. That's a long stock. Shows you the prices, shows you everything, shows you your profit. So then you start keeping track of what you have. Now, if you're doing something like a covered call, and, you know, TIM, let's say we're doing a Tim covered call, that's my name after all, then what I personally do is you can do it as a debit for an entire covered call, but frankly, that's only if you're getting into the entire trade on its own and then out of it on its own. That's probably not how you're going to trade covered calls, I'm guessing. What you'll probably then do is, let's say that on this long stock instead, so let's go ahead and log the covered call. It would be a debit trade because a covered call is a combination of you buying shares and selling a call. The totality is a debit. Maybe you traded it on 4/1/17 for $11.11. And let me look at size. And then you got out on 5/7/17, okay, for $11.50 for one. You'll notice that the entry and exit size whenever you do an option should be based on the number of contracts, not the number of shares. So a covered call trade would be one size because you had 100 shares and sold one call. Now let's say we took that same trade conceptually and we separated it though. If we then did the Tim covered call in two lines, then you would put in the long stock, okay, that on 4/1/17. You paid $11.30, okay, for 100 shares. And then you would also then put in, you know, the Tim covered call that you got a credit for that trade on 4/1/17. And let's say that one was for 19 cents or something like that. Your option strategy, once you do a credit, that's an option strategy. You have to then put in short call option. And your size would then be 1. When you get out of the trade, let's say your exit date was 5/7 of 17, where you got rid of the stock for 11.55, and you did 100 shares, it would then log the trade at $25 profit. And maybe on 5/7 of 17, you got rid of the call, you bought it back for a nickel, for example, and that would be a $14 profit. So if you're doing the covered call as a combination, you need to look up exactly how those fills happened. I would recommend most traders should probably separate the different lines out for the covered call trade alone. Now let's say that we're then doing a mat trade, and this trade is a credit for, let's go through maybe something like an iron condor. If you're doing all 4 legs in, all 4 legs out, you can then build that trade. And let's say this one is 9 or 10/13 of 17. And your entry price was $1.30 for one contract. And then on 11/16 of 17, you get out for an exit price of, let's say 25 cents for one contract. So when you're going to use the entire spread, for example, like covered call or like iron condors, when you get into the entire trade as 1 and then get out of the entire trade as 1. If you're ever going to break the trade up one side or the other, for example, what an iron condor is 2 credit spreads, right? So if you're getting out of the bull put or the bear call independently, then what you have to do is you have to build them independent, okay? And then you'll learn how to do this. The entry date would have been, for example, in that example for a mat trade would have been the same, and maybe you picked up 80 cents on the 1. Oh, and I got to make sure I put the date in here, right? And we picked up 50 cents on the other one. Then your sizes would be separate, so that if you ever get out of them separately, for example, maybe you get out of the bull or the bear call on the 10th of November, and you buy that one back for 10 cents, and then you get out of the bull put on the 16th of November, get out of that one for 15 cents or something like that. Then you're just simply logging your trades. So how you use the journal will depend on how you trade a little bit. If you get into the entire thing and out of the same thing in 1, then you would log it as 1 line. Whenever you're breaking them down 1 at a time, you then need to log them as separate lines because that's where the management came in. Let's do one more. Let's say we call it a Geno trade here, and we're going to have to do 2 more now. Now I got to add a Noah trade. Let's say we do a debit trade where we buy a call option. Well, that one would be a simple one, and maybe we get in on 2/14 of 18, right? And the entry price is $5.10, and the entry size is 1. And on 2/16 of 18, we get out for $4.40 for 1. Whenever you have a losing trade, it will then come in here and show you a loss in red, right? And then debit or credit, depending on the type of trade. Let's do a Noah trade here. And let's say that we then did, let's do another credit. Very simple, good trade that we use quite often would be something like a short put option, also known as a naked put. And on June of 16th of 18, then maybe Noah received a credit of 80 cents and for a size of 7 contracts. And this is where maybe we did a partial exit, for example. On 6/30 of 18, Noah did an exit price of 25 cents for 4 of the contracts. And then on the 7/7 of 18, he got rid of the other ones for a nickel for 3 of the contracts. And then it would log in the total profit or loss. Now, let me show you a couple things. Number 1, you can keep up to 100 trades in one journal. Whenever you get past 100 trades, I would, if it were me, I would name them appropriately for the account or for the month or for the year. And once you get past 100 trades, you would name it like, options trading 2018, right? Or, my margin account, tackle trading trade journal margin 2018, something like that. Name it appropriately, make it your own. And then where it says equity chart here, it then will start to keep track of what the balance of my portfolio is over time and showing me my upswings and my downswings and back and forth and back and forth. This thing called list will just explain what the different lists are. You can customize some of these. I wouldn't fiddle with that, but I definitely would learn how to use this journal. It's very good for stock. It's very good for the options. You got to learn how to use the independent cells. And let's do one more. Let's say that I did one more trade. We'll make this one a losing trade so we can show you the percentages. Let's say I shorted a stock, no option criteria, and I did it on 9/16 of, let's do 19, right? And I shorted it for, let's just throw out a random number here, $77.50 for 800 shares. And then I got out on 9/25, so 9 days later of 19. And I bought it back for $78.33. Let's say I got stopped out of the 800 shares. It'll then show me the loss based on the share quantity and the distance and the price. It's doing the math. Data that's very helpful for traders that we would look at. And by the way, gathering data and keeping score is really important. What's my average win versus my average loss? What's my average number of days in the trade? Am I in randomly? You can kind of see down here. Some of them, I just kind of ran through some numbers here. 2 days, 30 days, 28 days, so on and so forth. Total trades, how many I did, wins versus losses. This relationship's very important. The average win versus the average loss. In this account, my losers are a lot bigger than my winners. Now, information is valuable. When you're working with a mentor or something, you can then share a spreadsheet and your records to make their life a little easier in terms of helping you understand your trading system. So here we are, Trading Journal. It's a great one. Tackle Trading, your best community online that you're ever going to find. If you want to be a trader, you got to have the right tools, and even basic stuff like keeping score can help you improve your trading. This has been Coach T from Tackle Trading. Get in the game.